Shannon's in Boise, Idaho. Hi, Shannon. How are you?
I'm very good. Thank you for taking my call.
Sure. What's up?
Well, I have a question about short-term life insurance. My husband and I have short-term life insurance, but we have about half as much as you recommend. And I guess my question is why do you recommend so much?
Okay, good question. Well, we call it term insurance, not short-term insurance, and we recommend 10 to 12 times your income. And so you're saying you got about 5 times your income, and we recommend 15 to 20-year level term insurance. So, what's your husband make?
He makes about $250,000 a year.
Wow, awesome.
Yeah.
Well, you may not need to do that. It's up to you. Here's where the idea comes from.
Okay.
If we want to replace his income, and the investment upon his death is going to make 10%, that means you need 10 times. So if we had 10 times $250,000, that'd be $2.5 million, right?
Mm-hmm.
$2.5 million invested at 10% creates $250,000 a year income.
Okay.
So we're trying to replace his income. Now, in your all's case, there's 2 possibilities that might mean you would want less. One possibility is you don't need $250,000 to live on if he dies.
Right.
Okay, so you could reduce it to 10 times whatever you want to live on. Okay?
Okay.
The other possibility is he's making bank right now, and you guys ought to be investing and building up your investments, and the more you have in investments, the less you need insurance.
Right.
If you had $2.5 million in mutual funds right now and he died, you'd be okay. You wouldn't need life insurance at all.
Okay.
Because you became self-insured. So as your assets increase, your debts decrease, and if you want to live on less than his current income, 10 times whatever amount you're going to need that your investments won't create. So if you already had like $1 million in there and you wanted to add $1.5 million to it, then you just need $1.5 million. You know, you wouldn't need that. But that's where the calculation comes from. It's a fairly primitive, basic calculation, but it gets you pretty close. Most people don't buy enough life insurance because they buy the wrong kind. They buy expensive whole life rip-off, cash value, rip-off, flexible, premium, adjustable, universal, double backflip insurance crap. You know, and it costs 10 times, 20 times more than it should, so they don't buy enough. So that's the thing. That's the point we're after here. So just get enough that your family can be okay off of the investment returns if he dies. That's what the concept is. We're replacing his income. We're replacing your income if you die too, by the way. This is the Dave Ramsey Show.